Welcome back to this session, and in this session we are now going to cover different chart patterns, and this is part of our Candlestick Intelligence series where we are going to understand lots of things about candlesticks. Now we are going to see and understand what are the different kind of patterns we should be looking for in the market, and these are the key patterns which are going to help you lifelong if you understand them well. After this session is over, we are then going to cover different aspects in practical terms. So this session is free session where there are 5 premium sessions where we are going to understand in practical aspects how all the concepts are going to be applied, how the institutional call traps happen, institutional breakouts happen. Similarly, a complete trading system, how it looks like, how should we design it, and after that we will also understand the failed patterns, then the back testing, and then the psychological aspects. But in this session, let's focus on the different kind of patterns which are key to understand the market. So first thing is that there is a ascending pattern and then there is a descending pattern. So market is going here. So this pattern is clearly an ascending pattern. Now, if you look at the market, which has gone from this to this, right? So this is a market never goes down or up in a straight line. So down, up, down, up. So this is a staircase kind of descending pattern. So these are the two patterns which are very basic kind of patterns. Now, what is happening in a descending pattern? So first market falls down. Some people think that now it's time to buy, they buy. But overall market is on the downside. So a lot of people take this as opportunity to sell further. They sell further. Similarly, again, some people come and they think that enough is enough and let's buy, and it keeps on going down. Similarly, for the upside pattern also, it goes up. Some people do the profit booking here. It goes down. Some people buy the dip and then it goes up. Similarly, it keeps on going up and down in the positive direction. So that's your ascending and descending patterns. Now, let's talk about ascending triangle kind of pattern. So what's an ascending triangle? Let's understand this with an image. अब ये image दिखाना. Now let's understand this with an image. So this is what we will call it as ascending triangle pattern. Because you look, market is making a top here and there is a resistance, but at the bottom the support is shifting towards upside. So there is a ascending triangle which is formed. Now on most of the occasions, see, it may fall down below this, then it will break out on the downside and we should be exiting our positions if we have already bought the stock, or if we have not, then we will wait. And most of the time this ascending kind of triangle breaks on the upside. So when breakout happens on the upside, you just wait for one candle confirmation and then jump into the trade, and then most likely it is going to provide you the benefits. Are you in the stock markets but still guessing your next move? I am from Uncover Markets and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day, or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. And one very important aspect which you need to remember about ascending triangle is it's a continuation pattern. So that means the price would have been coming somewhere here. After that, it consolidated, and after that, it just created some kind of more consolidation where it is creating a ascending kind of pattern. So overall trend has been up, and in between there is a ascending triangle which has been formed. So that will mean that there is a breather which market is taking at that point of time, and slowly it's turning upwards and then it will break out someday. Now let's consider a descending triangle. So in the way we have discussed ascending triangles, descending triangle is also working in a similar way. So now let's talk about how a descending triangle comes up. So market is in the down territory initially. After that it consolidates, it goes little bit up, and after that it gets stuck in a triangle. Now when it gets stuck in the triangle, then we will see how is the mood of the triangle. When we say mood of the triangle, that simply means is it creating a ascending kind of pattern or descending kind of pattern. So if it is creating a descending kind of pattern, that means it is aligning with our structure, because the structure was that market was going down, after that there was some buying, which is a genuine thing, because if market has fallen, some people will definitely think that it is right time to buy. So they have bought, and after that it got stuck in a descending kind of triangle, and then most likely it breaks down on the lower side, and that would mean that further there is some market death. Then that would mean that market is going to crack further below. So this is another triangle kind of pattern. Now let's consider another kind of pattern, which is symmetrical triangle pattern. So when we set symmetrical triangle pattern, the previous kind of trend could be from this side, or previous kind of trend could be from this side. So we have to be very careful. So when this symmetrical triangle is formed, then we have to see what was the previous trend. So if it was a previous trend on the upside, after that this triangle is being formed, then market would be going on the upside most likely. But if the previous trend has been on downside, and after that we get stuck in this similar triangle, then most likely this trend is going to continue, and this is going to break on the downside. So that's how this symmetrical triangle is played. Now let's talk about another pattern, which is a flag pattern. So it can happen in both ways. So right now the example which we are taking is market has been going up, and after that it got stuck in a flag pattern. So what has happened? Market has gone here, and now it has created a pole of this flag, and after that market had a run where it gets struck into the upper and lower parallel kind of range. So now this range has been created, and once this range is broken, then on that kind of side we are going to take the trade. Most likely this is kind of breather pattern, which is a breather from the previous trend which was going on. So previous trend was going on the upside, it takes a breather, there is lots of accumulation which happens by the big investors here, and after that there is a breakout which we see. So that's how this pattern works. And now, are you in the stock markets but still guessing your next move? I am from Uncover Markets, and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day, or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buying, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. There is a flag pattern. So this is called a flag pattern. Now we are talking about a wedge pattern. So it is just kind of flag pattern, but the lines are converging. Lines are converging a bit, and after that you can see when the lines are converging, somewhere it is going to go outside of it. And once this breakout happens, it's generally a very explosive breakout which gives you a lot of good returns. Now let's come to a very basic and simple pattern which we call as double top and triple top pattern. Now look at this pattern. Market has been going here. Now there is a double top. So there is a resistance line created here, and now market has fallen, market again goes up, and after that again it has created a resistance line here, and it has gone down. So now this is a double top pattern. There could be a triple top pattern as well. So suppose market goes here and goes up, so again it goes up and goes down. So if it is double top, it's strong. If it is triple top, it's further more strong. Suppose it's 4 top, 5 tops. So the number of tops being made is higher, stronger is this resistance zone. So this is called as double top, because after that it is a valid line which we call as very strong resistance. If one more top comes here, then it will become a further higher level of resistance, and after that we can expect that market will go down. So this is a double top, and there is a reverse double top as well. So if you just reverse it, market goes down, goes up, market goes down, then goes up. That means these are double bottoms, or so now, so these are double bottoms. So market is expected to go only on the upside when it has touched here. So similarly, in case market has created another low on this level, so it will become a triple bottom, and it becomes even a stronger support zone, just like we have discussed for the double top or triple top. Now let's come to head and shoulders pattern. Now this is a head and shoulders pattern. So here is the head, and here are couple of shoulders. So what happens? This is the neckline. Okay, so below your shoulders there is, you call this as the neckline. So once this neckline is broken, then there is a definite negative pattern which has been emerged, so we can liquidate our positions here, we can exit from the positions here simply. And in general, we will consider that market has gone here and there is a possibility that market will bounce back from here. So if it bounces back, then you take the trade on the upper side, but you should first wait and expect a breakdown below. So you have to be very careful once market reaches at this head and shoulders pattern. Now there is a very important pattern which we should talk about is now the
Are you in the stock markets but still guessing your next move? I am from Uncover Markets and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day. Or let us handhold you through long term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you.
cup and handle pattern. It keeps on forming in the market on every kind of chart, and it provides a very strong signal towards the bullish end. So how it happens? So this is a cup. First, a bigger trough you can see in the cup. So this bigger depth, and after that there is a handle kind of depth. So first depth which you can see is much lower, after that market goes up, and after that market has created a smaller depth. So once this depth has been created, then it starts to go up, and then this is the resistance line which has been created because of the cup. So this is the top of the cup, and once market just goes upside from this cup, then we can expect that it is going to explode further on the higher side. So that's the cup and handle pattern. So now the thing is how you are going to confirm those patterns. So one thing is that volume confirmation you can have. So when, for example, here the most important level is here. You have done the identification here, you have done the identification here, and now you are making a confirmation at this level. So once at this level you are making the confirmation, then the volume, if volume is also supporting it, average volume at this point of time is more than the previous few days, then definitely this is going to provide you a lot of confirmation and you can take the trade. Secondly, you need to see the context, how the market has been behaving before this pattern has been made. So has it been behaving from low to higher side or higher to lower side? And based on that context, you will be able to define. Now, third thing is that you have to define your stop losses. So once suppose you have entered here, right? So you need to define your stop loss. You can put your stop loss either below this candle or you can put this below this, because I would ideally put my stop loss here because this is the stronger point below which we don't expect the price to go. Why? Because first you have made a bigger dip, after that you have made a smaller dip. So a smaller dip should be respected when market is going down. But if it has been broken, then that would mean that our stop loss will be now triggered because there is something seriously wrong about this stock, and that's why it wants to go down further than this point. And based on the situations, sometimes you take this as the stop loss as well, depending on how big this stop loss is and what is your tolerance level. Now in the next videos we are going to cover institutional candle traps and breakouts, and then the complete trading system. Also we will see the failed patterns and some case studies as well. So all of that is going to be part of our premium offering, so you can subscribe and be part of that. Thank you.